In this video, I'm going to dive into personal credit. No, matter of fact, I'm going to deeply dive into personal credit and everything you need to know about personal credit. So stick around, join me on the other side. So your credit is used for everything here in America, whether you apply for a mortgage, auto loan, you apply for an apartment, you're looking to get a credit card, you're looking to get insurance in some states, they will run your credit history and see where they can rate you at, or if you're even credit worthy, meaning if they will even allow you to maintain credit. So it is important that you understand credit, what goes into credit, and how to maintain a good credit score so you can get approved for the loans that you want, and you can get approved for the loans that you want or the insurance or the home at affordable rates. So we have two different kind of scoring models, the Vantage score and the FICO score. The Vantage score normally goes up to 900. The FICO score, the most popular FICO score, goes up to 850, although there are different scoring mechanisms or different scoring models for bank cards, for auto loans, and for mortgages. As I previously stated, the most popular scoring model is the scoring model that runs from 300 to 850, although different lenders may use a different version of the credit scoring models, either the FICO one or the Vantage score. So before you apply for any credit, you want to check your own credit and see which one that the lender that you are applying for is using, because that will make a difference. And again, whether you are approved or not approved, whether you have a high interest rate, a low interest rate, everything goes into that. So you just want to make sure before you apply, you know exactly what scoring model the lender is using. So when applying for a loan or a credit card, the lender will usually pull your credit report and use your credit report along with other factors like your employment history and things of that nature to determine if you will be approved for that loan or credit card, and how much you will be approved for, and what interest rate and fees you will qualify for also. So again, it is important to know your credit score and what credit model, scoring model, that the lender that you are applying for is using. One might ask, who are the agencies that give you your credit score? I got you. We have three major ones here in America: Equifax, Experian, and TransUnion. And depending on the time of the day and what is reported, you can have a different score across all three. So there are 5 factors that affect your credit score. The first factor, with the biggest piece of the pie, is your payment history at 35%. And that is literally what it says, your payment history. So if you're late, that can really impact the so there are 5 factors that affect your credit score. Factor number one, with the biggest slice of the pie, is payment history at 35%. And again, the payment history comes in at 35%. So on-time payments will have a great impact on your credit score. With that being said, at 35%, if you have late payments or you late all the time, that will have a negative or an adverse impact on your credit score. So you want to, if you have credit, when you get credit, make sure that you are paying your payments on time, paying your credit back on time. If you have to, automate your payments so you don't have any late fees, because one late reported payment can affect you between 50 and 100 points, and you do not want that. It takes a while to build back up that good payment history. The second part that goes into your credit score is the amount owed at 30%. You want to keep your balance low on your credit cards if you can. For a general rule of thumb, they say keep your credit utilization to 30% and lower. I've learned and I noticed over the period of time that I've been, using my credit at a good rate, that anything under 10% has a great impact anything under 10% debt utilization has a greater impact on your credit score in the long run. So again, the amounts owed that you have owed, the amount of credit that you have owed is 30% of your credit score. So you want to make sure that you are paying your balances off on time if you can. And if you can't pay your balances off on time, make sure that you keep your debt utilization low. Keep your credit card utilization low if possible. It will have the biggest impact on your credit score going forward. So the third part of your credit score is the length of credit history, which comes in about 15% of your credit score. So again, most people can't really do anything about this except just wait over time. If you just open up new credit like last year, then you might have 10, 12 months of that credit card on your credit history. So the longer that credit profile stays open, the bigger impact that it will have on your credit score. Or even if it's something that's closed, it's still gonna have impact. Like for instance, my student loans were paid off about 4 or 5 years ago, but they're still on my credit profile, and it is helping with the length of my credit history because they are on my profile. So there's really not much you can do other than adding yourself to somebody's profile that as an authorized user to get around the length of credit history. That's one thing that you can do. So coming in at number 4 on what makes up the credit pie and your credit score is new credit, which is about 10% of your credit score. So what that means said is most people, or not most people, most companies that you're borrowing from, they don't want to see you out there just being reckless, applying for multiple loans, applying for new credit cards, like on a monthly basis. Now, there is something called like a time period where you can apply for multiple credit cards in a certain time frame or multiple loans to get approved for something about a 14 or 45 time frame. But that just all depends. But they don't want you like every other month just going out there applying for new credit and just looking reckless. So the general rule of thumb is to keep your hard inquiries below 2 to have the biggest impact on your credit score. So rounding out the pieces of the credit pad and the impact of the pieces of the credit pad is the credit mix that comes in at about 10%. So lenders want to see you have a healthy credit mix. They want to see maybe you have a credit card and an auto loan, or a credit card and maybe a student loan, or an auto loan and a mortgage. They want to see that you can balance multiple things at once, and that makes you look lendable, if I may say. So again, we have the payment history, the amount owed, the length of credit, the new credit, and the payment history that make up the credit file. So according to FICO, a good credit score is a score of 670 or higher. Here's a breakdown of the scoring ranges. Poor, 300 to 579. Fair, 580 to 669. Good, 670 to 739. Very good, 740 to 799. Exceptional, 799 to 850. To improve your credit score or to keep a healthy credit score, some of the things that you may want to do is to make sure that you pay your bills on time. Also, you want to make sure that you pay down your balances. Again, pull your credit reports often and check for inaccuracies, and avoid, like I said, avoid new credit applications unless you really need it. Just don't go applying for new credit unless you really need it. I know, you may be at a department store and they say, oh, to save 20% off, why don't you apply for our store card? And that can seem tempting, but that is an unnecessary pull on your credit. Like, if you ask me, I always turn it down. But again, so those are some of the things that you want to do to keep your credit either healthy, in a healthy position, or if you want to correct things to improve your credit score. All right, so to recap, There are multiple credit scores, although the most used credit score is the FICO 300 to 850 credit score. Um, Although the FICO have a credit score for a bank card, for a mortgage, and for auto that can go above 850 and have different scoring models. The major scoring models are FICO and Vantage scores. Vantage scores goes up to 900. Again, most FICO scores go at 850. There are three major reporting agencies here in America: TransUnion, Equifax, and Experian. Those are who you want to check with often to see what they are reporting to your credit. Each credit reporting agency can have something different reported to your credit, so you want to make sure that your credit is basically the same across all three profiles. If you like this video, or if you thought you learned anything from this video, or if you just want to follow my journey into being a content creator, this is only my third video, and I'm going to get better. I'm just going to keep practicing my craft. And if you like that, like what I'm doing, or like what I stand for, please hit that like or subscribe button, and I'll see you on the next journey.